everybody, welcome. Jason Hamilton here. I'm really excited that you're interested in our Golden Age of Cryptocurrency webinar. We have two true experts in this space that are going to break down for you exactly what you need to know around the cryptocurrency and the crypto world. We're going to talk about what exactly is cryptocurrency and how does it differ from traditional money. We're going to talk about blockchain technology and why it's important to the world of crypto. And we're also going to talk about why so many different cryptocurrencies exist. I believe there's over 15,000 at this point and what you need to know if you do want to get started. We're also going to talk about how to invest in cryptocurrency if that's something you're interested in, and also the legislation that is going to be coming from the new Trump administration that has committed to getting regulation around this space. So this is going to be a very informative webinar. We really hope you enjoy it. If you have any questions around the subject matter or investing into cryptocurrency in your current portfolio, please let us know. I'm happy to help you out with that. And other than that, please enjoy. Excellent. So thank you so much for joining. I am really excited to kick off this workshop here. And for those of you that are attending live today, you're going to get the fresh, unedited view, which is great. So by the time it comes out, we'll have it edited. So you get it from the real source, which is really awesome. So really excited to talk about this. So just a kind of precursor why we're even doing this today is we have a lot of new updates in the crypto space. I've been really interested in the crypto space and blockchain space for a number of years. And I do have a handful of clients that are in that retirement space that maybe bought Bitcoin 15 years ago. You know, they bought Ethereum 10 or 15 years ago, and now they're sitting on $200,000-$300,000 that they're like, well, how does this fit into my portfolio? And I'm seeing it more and more. So I wanted to bring two amazing experts to the group here to be able to, one, educate people on what crypto really is, what the industry is really like, and maybe what it's not like. And so I'd like to introduce both Braedon and Christine. So whoever wants to start first, that'd be great. Either way is fine. Just who you are, what you do, and how did you get into this industry and the crypto space?
Yeah, absolutely. Thanks, Jason. So happy to be here. My name is Christine Ahn. I'm the Regional Director for the Pacific South region of the United States for Bitwise. I was, just to give you a little background about how I got into this, the crypto industry, is I was approached by a recruiter who told me to look into Bitwise. I had my hesitation around crypto at the time because I wasn't really educated. It was still, an emerging asset class. But while doing my due diligence on the firm, I came across a clip of our CIO, Matt Hogan, speaking on a light bulb went off for me. The asset class itself is the biggest innovation in financial technology, and you couple that with a premier firm in this space. Bitwise has the brightest people, amazing aspirations to create high quality solutions and easy access to crypto for all investors. So the firm is incredibly innovative and really happy to be here.
Awesome. Well, thank you very much, Christine. So hello, everyone. My name is Braedon LaBar. I work closely with Christine to help cover the PAC South territory as well. And how I got into crypto. So I actually started my career on the advising side at Goldman Sachs in the ACO division, where I helped people essentially, fulfill their financial goals. And I always had an interest in crypto. I got into it fairly early back in 2017. And I started to recognize that it was probably taking up more of my personal life than actually my work life. So I realized I wanted to make the shift from Goldman Sachs, was exploring a lot of options, different firms, and came across Bitwise and really loved it, interviewed with them, and kind of put me to here. So just excited to be in the space. Like Christine said, I think it's a wonderful emerging asset class, and there's a lot of exciting things happening currently.
I love it. Thank you so much for introducing yourselves. So one thing I will say, if anybody's on live and you want to ask a question, there should be the Q&A feature that you can use to ask the questions, and we'll do our best to get to all of them today. And if not, we'll follow up with you after the, I guess it's a podcast, it's a webinar, really it's just a conversation to help people, understand this. A lot of these names on the workshop today are people that have been kind of hanging out in my Facebook group, or some of them are clients, and I've known them for years. And so this can be a little less formal than it might be if you're doing something at like a big university or something like that. These are all just really good people, really nice people. And I know, like I said, many of them personally. And I think most of them just really want to know, like, what exactly is cryptocurrency? How does it differ from traditional money? Is it a scam? Is it something that's real? Like, what is it? And maybe you can explain a little bit about that just in a professional view.
Yes, absolutely. Great place to start. Cryptocurrency is a digital asset that uses cryptography to enable secure online transactions without the need for a bank or financial intermediary. So it's completely decentralized. The largest crypto asset is Bitcoin, created in 2009, and it's the first ever money that existed without government control in a digital format. Like the value of gold doesn't depend on the Fed, Bitcoin is similar. It's an apolitical currency, and you own it without worrying about a central bank or an intermediary. How does it differ from traditional money is the question. Since it's, cryptocurrency, you think, how does it really differ? And so to make a transfer of payment using Bitcoin, users don't need a 2-day period or exorbitant rush fees. They simply send Bitcoin like a text message. And unlike in legacy finance, the process is simple, efficient, incredibly fast, and available 24/7, 365. Another big difference, by design, there's no single government or entity that controls Bitcoin. It can't be subject to arbitrary economic policy, hyperinflation, or authoritarian governments. Bitcoin is governed by code. It's a software whose rules are accepted and enforced by a worldwide network of independent computers. And thirdly, unlike traditional currencies, Bitcoin supply is fixed at 21 million Bitcoins. This built-in scarcity is designed to prevent inflationary forces. And for this reason, it's often been perceived as a store of value compared to gold. So those are the main differences between cryptocurrency, Bitcoin, and traditional money.
Braedon, would you like to add anything to that?
I think she crushed it. I think the one thing I'll add in, I guess, is about blockchain technology. And like Christine said, crypto is obviously a huge part of the financial system and how we're kind of viewing currencies as a whole. But I think it's good to give a framework of what blockchain technology is. And people kind of overcomplicate it. And all blockchain is, and Bitcoin being the first one, like Christine mentioned, was a solution to a computer science problem that people have debated for 20 to 30 years, which is kind of hard to believe because crypto seems so far in the future, but it's actually been talked about for quite a long time. And that question is, how do you have one database that's available everywhere in the world that everyone can look into, that updates in real time, but is not controlled by any third party or company? So essentially taking a company like PayPal, yet essentially removing PayPal from the equation. And just a couple of reasons why that decentralization factor is so important is it gives full control to the user. The data can't be altered, it can't be deleted, and it allows complete and full transparency. And the data is secure and it can support open source development, and different tools can be added to the network. So in a simplified manner, I think you just got to think of blockchain technology like a giant public ledger. Everyone has access to it, but it's completely secure.
So you mentioned that it's completely decentralized. Do you think it is even possible that the governments could stop it if they wanted to? Because it seems like more governments are jumping on board with it. Speaking of, El Salvador, our current administration, we'll get to that in a few moments. But you think it's even possible if they wanted to shut down the whole thing that they could do that?
Yeah, it's a great question. And this is one that we get pretty often from advisors and clients. And the simple response, no. Bitcoin has kind of grown too big. It's too big of a monster to shut down. And I think a good comparison is, could you shut down the internet in the world? I don't think it would be quite possible unless the internet all around the world just completely shut off. So in order to change or completely shut down Bitcoin, you would need a lot of resources. The actual amount of money that would actually require and energy it would require is beyond our comprehension. So I think it's kind of become too big to be really shut down from governments. Now, is that possible in like a doomsday scenario? Sure, but you can also throw in any other asset class in that doomsday scenario as well. So I think it's a little bit too far out of reach. If you want to add anything else, Christine.
No, I think you answered it well.
Yeah, in my home state of California here, they are putting all of the license information for the DMV on the blockchain. So I know there's going to be many uses of it, but can you explain, and you touched on it a little bit, but can you maybe go a little deeper on how blockchain technology works and just why it's so important to the world of crypto?
Mm-hmm. You want to take that, Christine, or you want me to go?
Yeah, why don't you explain blockchain technology?
Yeah, so adding on to a little bit about blockchain technology, I think it's important for numerous reasons. Like I said, the cost effectiveness is a big one. We talk a lot, especially with speaking with advisors. We're so used to how traditional systems work. And I think a funny thing is, we think about trading, especially like equities or bonds. We're used to 9:30 to 4, 5 days a week, holidays are off. And I think a funny, comment is last year we just went to T+1. We were T+2 for the longest time. And there was literally a Bloomberg article that said NYSE settles trades fastest in 100 years, which I think is pretty absurd. I don't think there's any industry out there currently that's trying to catch up from 100 years before. So I think blockchain technology is big for that reason. You can have things that are settled instantaneously at a fraction of the cost. If you wanted to send payments overseas or even doing anything maybe in a brokerage account, you might be paying specific fees. And I think a lot about small businesses in this scenario. When you go to small businesses, there's usually some type of surcharge when using a credit card or any type of card in that matter. And that's why they prefer cash. Because on the back end for that business, they're usually paying that system or that credit card company some form of fee. Blockchain technology can completely take away that friction and can really help support those small businesses. And that's just one of, I think, many examples that can make things a lot more frictionless in terms of payments.
Yeah, do you think we're there yet? Because you hear these terms like gas fees and sometimes to do a transaction. And I know in El Salvador, they made it a legal currency to use Bitcoin. Adoption originally went high because they gave everybody, I think it was $600 to start with, but it sort of dropped off a little bit. Do you think we're there yet that today, maybe not in the US because the US does have a very good financial system, but other countries don't. Do you think it is a realistic tool to basically use as a currency or a way to transact for businesses with reasonable fees today?
100%. And I always use this example that we're very fortunate being in the US. And I think that's sometimes why people have a hard time understanding crypto or really grasping their mind around it, because we're not in a society where our currency is being devalued or they can't trust the banks that they go to or even the government that they're under. And I think a lot about last year, I made a trip to Tanzania. And during that trip, I spoke with one of our guides when we were doing a hike. And in Tanzania, there's over 100 tribes. And just out of curiosity, I asked him, is crypto a big thing around here? Is this something that people do? And he said a large portion of some of those tribes use cryptocurrency. And that's obviously a far example from maybe what we're used to. And we're probably not looking at it through a different lens in the US. But I think for a lot of these countries that maybe do have some trust factor, especially with their banks or their government, or they're looking to save money in a secure way and make payments simply from peer to peer, it makes complete sense. Again, for us being fortunate in the US, it's a little bit harder for us to wrap our minds around when we have things like Venmo or we have things like Zelle that can also be used for different payments.
Tanzania, huh? That's a new one. I haven't heard that. I have seen it in Mexico because, a lot of times people will send remittances from here to Mexico, for example, and using Western Union could be 10% of whatever they're sending. So you send $1,000, that's $100 that's gone. And then also taking that cash, if you actually have to go to a bank, if you're somewhere remote, back to wherever you're from, it's a risk to have that much money in cash. So I'm seeing them even in Mexico using it quite a bit as well. And I was at a restaurant. This was in Puerto Vallarta this last year. And in a restaurant, they actually gave you a 5% discount for using Bitcoin versus a credit card like Visa or MasterCard. Any guess why you think that would be?
Probably the fee that they had to pay.
Yeah, one's a fee. And they also took USDT. So for those that are brand new to this, that's just an equivalent of a dollar. It keeps kind of pegs to a dollar. But talking with them is, you get somebody who comes in the party in Puerto Vallarta, they might order more drinks or more food and kind of not remember what they ordered. And then they do a chargeback on their credit card. And so the success rate on chargebacks is, moderate, but there is no such thing as a chargeback on Bitcoin or USDT. Once you transfer crypto, the money's gone. And so for them, they actually will keep more of the money. It's about the same fee. It's usually 7 to 16% for credit cards, whether it's Visa or American Express. And so for them, it's a better deal to use that. So that's why I do think worldwide it's going to be something very interesting, and why I brought you here today to help people understand a little bit more. But it's very interesting to see what's going on in the world outside of our little bubble here, where we actually have a fully developed financial system. So on that note, when you look at cryptocurrency and the world of it, there's so many. People are creating them all the time. There was one recently where an internet person that kind of blew up, created her own coin, kind of sold it, pumped and dumped it, and then just disappeared. Why, can you talk about why so many cryptocurrencies exist and maybe some of the differences between, Ethereum and Bitcoin and maybe some of the other, I think it's maybe 15,000 plus. I know it was 10,000 last time I checked something. And why is there so many, what people should be thinking about when it comes to when they're either buying, purchasing, or using cryptocurrencies?
Yeah, I'm happy to answer that. And Jason, you are absolutely right. There's about 15 to 20,000 altcoins out there, and more are being created. It's like, it's similar to kind of, if you think about AI startups, thousands of companies start, but most of them fail. New ones, as I mentioned, new ones are created every day. However, the Bitcoin is the largest crypto asset. It has about a $2 trillion market cap right now. It represents roughly 60% of the crypto market. The second largest is Ethereum. It has about a 376 million market cap, representing less than 14% of the crypto market. And when you think about cryptocurrency, many people find it confusing because they think of, okay, Bitcoin and Ethereum as currencies like the dollar and the pound. That's the wrong mental model. So cryptocurrencies, despite its name, are more crypto assets and viewed as different software companies than different currencies. So for example, Salesforce and Microsoft are both software companies, but they're optimized to be good at different things. The same is true about Bitcoin and Ethereum. So Ethereum and Bitcoin, they're similar in many ways. They use blockchain technology, and they're traded on an online exchange. They both have spot ETFs available. You could store them in your cryptocurrency wallet as well. However, there are many significant differences and unique characteristics for each. So Bitcoin was designed to be a digital gold. It was intended to be an alternative to physical or fiat currency. But right now it's just viewed more as a store of value, okay? Ethereum, and Braedon mentioned this, is more of a technological platform where you can house smart contracts and decentralized applications. So completely different utilitarian utilities and they both have the blockchain technology, but they serve totally different purposes.
Yeah, I think one thing to add too, because you mentioned it, and I'm sure people get questions about it, are like the meme tokens. What's going on with that? You see all these famous people launching them, they're failing. There's definitely an interesting side to crypto, and I think that's kind of the interesting point. And I think a lot of these, 99% of these meme tokens are pretty much worthless. But I think there is a small 1% of tokens that are kind of coming up with an interesting, also like subsector of cryptocurrencies, which is community driven. So similar to how you would pay money to be part of a club, that's how some people are viewing some of these meme coins, or if there's a specific topic around it. So it's still yet to be determined what the future of meme coins really holds. I think it'll be interesting to see how it plays out. Maybe they won't be called meme coins anymore. They'll be called community tokens. Now there are a lot that will obviously fail in that space because there's some interesting components to it, but I think there are some seriousness to it, as well, as crazy as that might sound, for some of those more legitimate companies that are launching some tokens that are more community driven.
So I want to just make sure we take this back to the basics, because you mentioned something, Christine, called altcoins. So I want to make sure everybody's on the same page with this. Like, I want this to be a 101. We're going to get a little bit more stuff that's somewhat technical, but I want to make sure someone who's brand new to this can understand some of these terms. Maybe you can break that down a little bit between altcoins versus main coins, whatever you want to call them.
Yeah, so altcoins by definition, it's anything other than Bitcoin. So Bitcoin is the biggest, oldest crypto asset out there, and then everything else is considered kind of an alternative coin. So that's what I mean by altcoins. And there are thousands of them out there. And meme coins, really, like Braedon mentioned, most of them are worthless. They're kind of considered similar to penny stock. So that's how you could view meme coins. Yeah,
that's what I was going to say, because there's penny stocks that are out there that are similar, right? It's pretty much going to be worthless. You're just gambling at the end of the day with some of those. But even I think some of the terminology, we said Ethereum, but Ethereum's really a blockchain, right? Ether is actually the cryptocurrency that is built on top of that, right? So there's levels to this stuff that you really need to know a lot. And again, I have a certification, but I still feel like I don't know anything compared to what the whole world is. So these are things that, if you want to invest in them, I generally don't recommend people invest in things they don't understand, right? But the reason why I brought you here is because you work for an ETF company that's making it a little bit easier for people to invest in a way where they may not get their wallet stolen. There's some sort of securities there. So can you talk about the ways if you want to put some money into cryptocurrency, what are maybe the traditional ways or some of the new ways, what's now available, and give people like a high level view, and then also like what's advanced in the field since maybe even a few years ago.
Yeah, so I think an easy way to break it down is there's essentially three ways that you can approach investing in crypto today. I'll start with the most common one, at least outside of like the advisory practice or what we do as a business, is directly through like an exchange. You hear people going to open a Coinbase account, buying cryptocurrencies on there, and essentially having it as essentially like a brokerage account, but for crypto. The pros and cons to that. One, the fees can be somewhat high. They range anywhere from 0.5 to 3% when you're transacting. And another con for that is, you don't actually own that cryptocurrency. So it's actually tied to an exchange. Just like if you had your money in a bank account and that bank went under, probably have to go through some extensive court process. Just like we saw with FTX in the past, all those people that had accounts through FTX, their crypto was essentially tied to that. So that is a con, not saying that because we think Coinbase is going to fail. We think they're a very reputable company, but there's obviously always risks associated when you have another third party involved. The pros to that, there's obviously flexibility. You have access to that account 24/7. That's what crypto was built to be. You have access to thousands of coins on Coinbase's platform. So if you want the flexibility of choosing different coins, like those altcoins that Christine mentioned, that is an option. Now, the second option is cold storage. This one's a little bit more on the complex side, and this basically involves holding this cryptocurrency on your own. So when you hear those crazy stories of people having like Bitcoin on a hard drive or it was tied to a computer, that's what they mean by cold storage. And what that simply means is it's not off, or it's not connected to an exchange or any type of third party. It's sitting in that wallet on your hard drive or on your laptop, and the only person that can essentially access that is you. Now, pros and cons to this. Pros, you actually own your crypto. It's not tied to any third party. You can do with what you want with it. From an investing standpoint, there are some cons. The first one being it can be a little bit more complex. So if you want things to be a little bit more simplified, you are concerned about sending it to the wrong address, there's a lot of more complexities to it. And then I think lastly, making sure that your seed phrase is protected. And for any of you that might not know what a seed phrase is, it's essentially like your social security to your crypto wallet. It's that special number that no one else should be able to have access to, because if they do, they have access to your crypto. So you actually have to protect that as well, which kind of creates this whole level of security. And again, there's different driven complexities to that. If you send crypto to that wallet from an exchange, you got to make sure the addresses match what you're sending it to. Otherwise, that could vanish. And then the last option, which, I'm gonna sound biased when I say this, but I think it is the best option, is through the ETFs. So we launched our Bitcoin ETF last January, along with the Ethereum ETF came shortly after last summer. And the reason that there's a couple benefits to investing through the ETFs. The first one is it's directly through a brokerage account. Or if you were to use someone like Jason, like an advisor, they have access to these ETFs in a pretty easy way. And since it's tied to that brokerage account, it's fitting in with your whole financial situation. The second pro to it is the cost effectiveness. These Bitcoin ETFs are very cheap. Ours is 20 basis points. Most of them are within that range. So you're not dealing with that high of 3% potentially transaction fee. It's only 20 basis points. And the third advantage, which I think is also important to think about within a financial plan, is these can be sitting in a tax advantage account. So whether it's a Roth IRA, a traditional IRA, you don't have that benefit if you were to hold it in cold storage or if you were to hold it on an exchange. So those are a little bit of the different pros and cons. Different routes might make sense for different people. You obviously hear those people that are a little bit more crypto native. They want to hold in cold storage or away from an exchange. But people that are looking to invest purely for fitting within their financial plan, doing it in a tax efficient way at a very low cost, sometimes those ETFs can make the most sense.
Yeah, thank you. That was a really good explanation. And what I say is, for people that know what a cold storage wallet is, it kind of looks like a USB drive, or it can look like a USB drive. They even have them on your phone. But you could technically put millions of dollars on this little USB drive, put it in your pocket, get on a plane, go to another country, plug it into a computer, and access those funds. So there are some potentially capabilities that you can do things with that outside of what you can do with an ETF. But if you just want to add a little sleeve to your portfolio, diversify a little bit, dip your toe in the water, ETFs are a really, really simple way to do it. And that's what we usually do and recommend. But those fees is a really big deal. Every time you make a purchase on Coinbase, it could be 1 to 3%. I've even seen higher, just depending on what's going on the different cryptocurrencies. So, all really good information. When it comes to trends in the market, or new developments in this space, I feel like every day it's something new. But what are you seeing as far as trends or new developments in the crypto or blockchain space?
Yeah, you're completely right. It does feel like something is new every day. Even being in this space 24/7, it sometimes can be overwhelming with how much new things are happening in crypto. I think the largest focus as of now, and the things that we're most excited at Bitwise, is kind of this conversation of we're entering the mainstream era. And that's what we've been saying for the last 2 years, is this is kind of a point in time. And it's the first point in time that the banks, the institutions, even now the government is looking at crypto, and they recognize that it's important and it's going to actually have an impact. It's important in a meaningful way, and it could change a lot of different industries across the world. So the thing that excites us in terms of new developments is how we're going to see crypto, whether that's blockchain technology or just Bitcoin or investing, be implemented across various industries. Blockchain technology is wonderful. It has so many vast benefits, like we discussed earlier. And I think we're going to start seeing that being implemented in some pretty serious ways at the bank level, at companies, making sure they're tracking. I remember back when COVID happened, we heard that COVID was actually being tracked on using blockchain technology for COVID cases. So whether that's the medical industry, so I think that's the thing that excites us the most. People don't just view this as a speculative asset, a gambling area for investing, but they recognize that it's important. And especially on the bank side, since we're seeing that regulatory door kind of open up, is what really excites us. The second thing I'll touch on, and this is a little bit more in the early stages, but I love mentioning it because it's in the news every day, is AI. I think if there were two industries that were meant for each other, it's probably crypto and AI. So that's something, again, it's in the early innings, but I think as we start to see these AI developments kind of come out, as these new applications get developed, how will certain payments process, or how will these AI applications work for payment processing? And I think crypto kind of fits that bill perfectly. So the things that we're most excited at Bitwise, I think, is, again, the mainstream era conversation, the banks, the institutions getting involved. And AI is something just to kind of keep an eye on, that it's a new development, but it's something that's very exciting.
I think I totally agree with you. It's this whole world just merging of just all these crazy technologies that have been talked about or kind of were in early stages, but now they're all just accelerating so quickly. One thing I do want to touch on, as far as adding some crypto assets to your portfolio, or some Bitcoin to your portfolio. Inside the Facebook group, the Your Retirement Coach group, if you're not a member, you can request to join, but I think everyone here probably is. Braedon and Christine were kind enough to give me a paper. And this paper has an example of what it would look like to have somewhere between 1% to 5% in a normal retiree's 60-40 portfolio that probably most people have, something like that. It's actually really interesting because it has improved, returns and helped things be less volatile over time. So as a diversifier, I do think there's value there. I don't think anybody should put all their money there, but 1% to 5%, there is a lot of data behind that. So that paper's in there for you to read if you'd like to learn more about that. So you mentioned the regulation side and the government side. We just had a presidential election just close out. How do you think the election is going to impact the crypto industry?
Oh, we love this question because it's the forefront of our minds, and a lot has happened since Trump's election victory. So for the first time in history, we have a pro-crypto administration. And since Trump's election victory, Bitcoin has gone up nearly 40%. And since Trump has taken office, he's done a lot in the digital space, including issuing a major executive order, a crypto executive order that focuses on growth of crypto and digital assets in the US. And this is hugely important because it creates regulatory clarity, which is what the industry has been lacking, and more innovation in the crypto industry. So great things. A couple things I want to point out about the executive order is, first, the order makes growing the crypto industry a national priority. And this is so different from the previous administration and how they viewed crypto. So this is a huge step forward. It's an end to Operation Choke Point 2.0. So what that means is the order immediately rescinds Biden-era policies aimed at crippling the crypto industry, which severely restricted the ability of crypto-related businesses and individuals to access traditional banking services. And in the related news, the SEC also rescinded SAB 121. Now that's an accounting bill, a Gensler-era policy. Gary Gensler is no longer the chair of the SEC, but so SAB 121 restricted banks from providing basic custody and other services to crypto. And so by having this rescinded, it really gives banks the ability to grow further with the crypto industry and custody crypto assets going forward. So that's really, really exciting. The president has been tasked with creating a working group on digital assets. So they're creating a group where they have to develop regulatory clarity in the next 180 days. And this clarity includes regulatory agencies and determining whether crypto assets are securities, something that has been a huge contention over the past year. So the regulatory part is arguably the most important part of the executive order, because that is absolutely necessary for an industry to thrive and for investors to really feel comfortable in moving forward with crypto. Another thing about this executive order, they're really throwing their full weight of support into promoting US dollar stablecoins. So that's a really good thing. And a really interesting idea from Trump's administration is that they want to establish a national Bitcoin stockpile in their national reserve. So that's something that we're looking forward to. It hasn't been executed yet, but we'll see how that plays out.
Wow, very interesting. I know the US has a huge stash of Bitcoin. Do you happen to know how much they have offhand by chance?
I think it's close to 200,000. Like 198,000 might be the exact number. That's roughly off the top of my head. I think like right below it.
So 200,000 Bitcoin, right?
Yes.
Times $100,000 per coin, right? So I don't know about the math on that, but that's a lot. And a lot of these big companies, especially the BlackRocks of the world, Fidelities of the world, for many years they were kind of bashing, the idea of Bitcoin, but at the same time they were buying up a bunch of it as well. So for me, it's more like they were downplaying it to keep the price down so they can get a store of it, but now they're sitting on billions and billions of dollars of it. So it's hard for me to just tell anybody who's interested in it that, you should never invest in it. It's just purely speculative. And really, in reality, it is speculative at the end of the day. But when you have companies of that size hoarding that much, and also the U.S. government hoarding that much, to me, it's just, we need to learn more, and we need to study it more and become more educated about it. So for some people here, they may feel like, I missed the boat. I missed the boat. Should I even think about this? Is it too late? Is it all going to crash? Can you talk about, where we're at when it comes to stage? What stage are we at? A little bit about the cycles, maybe. The halving is a concept people might have heard about before. That comes up every certain number of years. And is it purely speculative now, or do you think it's getting more to an institutional type of asset that is worth considering for at least a small portion of your portfolio?
Yeah, I love that. And I love the comment about all the banks talking poorly about it and changing their tone. And that's typically how the process goes for people that find crypto or get involved in crypto. And one of my favorite stories is, and I'm sure you've seen him before on CBDA, but Jamie Dimon talks pretty poorly about the space pretty frequently as well. But little do a lot of people know, JP Morgan has a 500 plus employee team that's dedicated to blockchain. People start off that way, but I think as they learn more or they're just saying that to say that, it definitely has a meaningful impact when they start to learn more about the space. To your question about like where we're at in the cycle, or how far have we made it? I think we're at that point where we're kind of crossing the chasm, as I like to say, in terms of like technology growth. So we're going from those early adopters to like the early majority. To put it in perspective of like, what does that mean for Bitcoin or crypto? I think a perfect comparison is like Bitcoin's in its teenage years right now. So it's not too young, it's not too old. You're starting to give them a little bit more. You're starting to trust them a little bit more. And I still think it's in those early stages, but we're starting to see companies figure out ways that they can implement it in very large ways. And I think a good comparison too, if you think of like digital store values or global digital store values, or just store values, something like gold, that's like a $5 to $20 trillion asset is usually those store values. And Bitcoin only being $2 trillion in terms of market cap, I think there's a ton of room for growth there. And a second analogy, since I'm throwing a lot of analogies at you, is I think right now is like when the first ever iPhone was put out to the public. Personal handheld devices were still a thing. They were those giant blocks before the iPhone, or they were the BlackBerry. So they were still a thing. And when the iPhone came out, it seemed like this crazy idea, but people started to trust it a little bit more. They said, hey, okay, maybe that could work when I use it in my everyday life. I kind of feel like that's where Bitcoin's at. It's been around for a little while. There's been older versions and people were looking at it through the lenses of different perspectives. But we're now kind of at that point where we're going from those early adopters to the early majority, and people are starting to study it in pretty meaningful ways. And I think it's going to be implemented in some pretty meaningful ways as well.
And very good. Anything you want to add to that, Christine?
I think it's important to talk about the cycles. Crypto has usually ran on a 4-year cycle. It's driven by a product innovation. And right now, Braedon mentioned we are in the mainstream cycle. We're about halfway through. And the halving is actually a very important, it's part of the code. It happens every 4 years, and it's very important in terms of performance of Bitcoin. And Braedon, do you want to talk about the halving that just occurred last April and what happens 12 to 18 months after?
Yeah, of course. Yes, to give some of you some context on what exactly the halving is, it's funny when people hear this word, I think their mind races to like 10 different things. I've had people say, is that like a stock split? Does the price of Bitcoin get cut in half? Does it have something to do with the supply? So to put it in a simple perspective, it's essentially the amount of Bitcoin that's being released to the public or being mined is getting cut in half. And what that's doing is lessening the supply that gets put out in circulation. So right now for miners, their block reward is 3.125. That's how much Bitcoin that they earn. Prior to that halving that we just had last year, it was 6.2 something. So what's happening every 4 years is the Bitcoin essentially rate that is being put out in circulation is getting cut in half. So that's minimizing that supply being put out in circulation, which is making it more of a scarce asset.
Yeah, and I just want to add that the amount of Bitcoin that has been purchased by the ETFs amount to more than double the amount of new Bitcoin being produced by the miners. So Bitcoin and crypto really have this positive backdrop, having limited supply but more demand, which helps the price.
Interesting. So back to clarify some technical terms that I know the basics of, but I just want to make sure everyone, the audience, does too. When you say miners, and then their rewards for mining the cryptocurrency, can you talk a little bit about that and what that is, and just make it really, really simple if we can?
Yeah, no, and I'm glad you asked that, because as it came out of my mouth, I'm like, I might be losing people here. It's a complicated process, but I think an easy way to think about mining is if you think about a bank. In traditional financial systems, so like the US, banks are in charge of processing and verifying transactions. In Bitcoin, miners basically fill this role. So at any given moment, anyone who wants to own Bitcoin can propose a transaction. They essentially publish it to the blockchain. So say Christine wants to send 1 Bitcoin to you, Jason. These transactions essentially enter this pool to await processing. So they're essentially waiting in line, and the miner's job is to process those transactions. Then roughly every 10 minutes, Bitcoin miners, and it's, these thousands of independent computers or companies that have thousands of computers, they can support the Bitcoin network jumping in. And they're essentially assembling a bunch of transactions, usually thousands at a time, into what we call a block. And that's where that terminology blockchain came from. And they're checking a couple things. They're checking that each sender has enough Bitcoin to fulfill this transaction. So they're making sure Christine actually has that 1 Bitcoin. And they're also verifying that the wallets match, that you actually want to send that Bitcoin to. So once that miner has a block of valid transactions, it essentially races all the other miners to solve this complex mathematical puzzle, essentially. And the first miner to solve that puzzle gets to announce the solution and publish that block to the blockchain. And the reason that's a good thing, and the reason is if they are that first miner to do that, why that's such a good thing, is because they're rewarded. And what that's called is a block reward. And so in turn, they give them, which today would be 3.125 Bitcoin, as essentially a reward for solving that block. So the two ways that miners can essentially earn money on the Bitcoin blockchain is they, one, successfully validate those block rewards to earn that 3.125, or another incentive is earning rewards from fees and transactions. So just like a bank, you're processing those transactions, and they're essentially the ones that are making sure that network is running as smooth as possible, just like a bank would with transactions as well.
So in really simple terms, it's a bunch of nerds that are really smart, that are all fighting for the reward. And so the incentive is whoever does it the most efficient way, the fastest way, gets the reward. So over time, it becomes a more and more efficient system, right? But I always like to keep things simple if we can. That's really what it is at the end of the day, right? And Visa, I think it was the CEO of Visa, I heard talking recently, said that they're processing 4 billion transactions a day. So this is what I think about the future of something like crypto or cryptocurrency is you get AI involved to create better and better, processing mechanics that can then outdo the human at some point, and then those two working together then brings the cost of everything down, and then that allows the system to be fully decentralized for a more efficient and cheaper cost than what we have today. That's kind of how I see things potentially working in the future. I don't know if you agree with that or disagree, but what are your thoughts when you compare something like what Visa is doing today with that many transactions to what's possible on Bitcoin, the Bitcoin network, or any other crypto network?
Christine, do you want to take it, or you?
Yeah. So stablecoin transactions, and stablecoin has been around not as long as Visa. Stablecoins came out in 2018, I think. Correct me if I'm wrong, Braedon. But if you look at the number of transactions that are going through the Visa rail versus the stablecoins, it's alarming. Like there's 10,000 in the last 3 quarters. Visa has had almost $10 trillion dollars in activity, and stablecoins have had over 8 trillion. So it almost rivals Visa closely. And so stablecoins and their usage is really growing rapidly. What would you add, Braedon?
No, I think exactly what you said. I think in the future too, it's even a possibility that things like stablecoins or cryptocurrencies could flip Visa or MasterCard in terms of transactions that they're doing on a daily basis.
Yeah, and I saw a recent, it was in the Congress, I believe, where they had the CEOs of Visa, and the fees that they charge, it's at least 3% on average, I think is like kind of the minimum fee. They're making a 50% profit margin, right? And so this comes out of the small business owner's pocket at the end of the day. So I think there's incentive as well for a more efficient system, because it's a monopoly at this point, and who can really compete with Visa and MasterCard? You got American Express, but they're not even accepted everywhere. Same thing, I think Discover is now merging with Capital One. Just found that out recently. And so that world's going to get smaller and smaller, and so there's less and less competitors. So I think this opens up a whole new world to potentially serve the human, better, the small business owner, and that doesn't have to be under the thumb of somebody who could say, oh, by the way, I'm not going to process transactions for you anymore because I don't like whatever you're doing in your business. I think that gets really interesting as well. But as far as conceptions of crypto, I think there's a lot of misconceptions. I think people think it's, more used for crime versus like the dollar is, high energy, volatility. Can you talk a little bit about some of the common misconceptions of the crypto market and maybe address those?
Yeah, this is a big one. And I know, Jason, we've even spoken about this in like previous meetings, but yeah, like illicit and illegal activities. That's probably the number one thing that people think about crypto. And I'll be honest, I think crypto got a bad rep from the start. You had things like the Silk Road and stuff in the early days where Bitcoin was the only thing that made the most sense. But the truth is that's not really the case for crypto. And the funny thing is, we talked earlier about blockchain technology. What's the number one benefit to blockchain technology? It's transparency. So the reality is, if any illegal activity is being done with crypto, you can track that very quickly. So if you actually look at the data, and I know there's been some studies on this, the US dollar is used like 2 times more than crypto for illegal activities. So I think that's a large misconception. To add to it, I think there's a lot more structure around like entry for like exchanges or trading. A lot of these applications are requiring like KYC, which is just like putting in like your social security and more information, so not just anyone could do it. So that's the one big one, is obviously illegal activity. But the truth is, illegal activity is used even more with the US dollar, probably more with cash, because of how easily traceable crypto is. The second one that you mentioned, energy, that's another big one. We obviously get that question a lot, but Bitcoin miners use a lot of energy. And it's true, Bitcoin mining is a pretty energy extensive job. And the only thing I will say though with this is it's not as much as I think users think it is, or people think it is. Our CIO, I remember mentioned, I think the stat was it's equivalent to like everyone's washers in the world, which is still a lot of energy. But I think the big thing that is pretty interesting to look at with Bitcoin mining and specifically in all that energy usage is a lot of these companies are turning to cheap and sustainable energy cases. So they're looking at things like solar, they're looking at things that like using water dams. And I think another cool example of Bitcoin mining is they're actually helping balance energy grids. So for in areas that energy, there's too much excess of it. So kind of going back to another place in Africa, Kenya is a great example. They had a dam that was using up excess energy every day and they didn't know what to do with it. A Bitcoin mining company actually entered to essentially place Bitcoin miners on that dam. So any excess energy that was being used by that dam was helping balance the grid. So not to go like too much into that, but it can really help actually balance out energy usage across different parts of the US and the world. And is it not as much as I think people think? And the third one, volatility. This is one of my favorite ones because I think there's two components to it. One, the truth is Bitcoin's volatility has decreased over time. It has lowered and it has been coming down. That being said, it is still obviously a very volatile asset when you put it up against things like the S&P 500 or any other traditional asset. The second component is I think you got to look at crypto's volatility as not a bug, but a feature. And the beauty about crypto is, historically it has been somewhat uncorrelated with traditional markets. So sometimes that volatility actually helps your risk adjusted return in a portfolio. It's not always going to be to the downside. And I think like we talked about earlier with crypto kind of entering this mainstream era, I don't think we're going to see those large 80% drawdowns like we have in the past. There's just so much going on in the space. I obviously can't say that with certainty, but with it being more well adopted, being more used, I think that volatility will start to decrease over time. But again, it is a feature, and I think it's a great benefit of investing in crypto.
And I just want to add that in terms of the Mag 7, like if you look at Tesla, Nvidia, Meta, Bitcoin is not an outlier. If you look at the 1 year performance of these stocks, these big stocks, Bitcoin has been similar in terms of volatility with these tech stocks.
And what's interesting is you are seeing a lot of companies starting to add Bitcoin to their balance sheets more so. And so their stock returns are coming in line with some of that as well, which gets really interesting. So the worlds are kind of merging, as you mentioned. It's just it's very, very interesting. So let's talk about the beginner, right? And someone who is just getting started, and maybe they want to dip their toe in the water. What maybe advice or guidance would you give somebody just starting with crypto to avoid common pitfalls that you see, over and over just being in this space?
Yeah, I would just say first and foremost, take the time to educate yourself about crypto like you are. You're joining this webinar, you're reaching out to your advisor, Jason, learning more about crypto, and make sure you understand the risks that come with the reward. I mean, I mentioned there's just thousands of altcoins out there. Most of them will fail. A lot of them are speculative bets. So you want to make sure not only are you avoiding those, but you're also understanding your risk tolerance. How much volatility are you able to stomach? Typically, a good starting point for crypto in a portfolio, as Jason mentioned, is 2.5% to 3%. It depends on your risk tolerance. Some go up to 5%. But it all depends on your specific investment profile, your goals, and that's what Jason is here to help guide you through that. And if you don't have the time or interest to really dig into crypto, you want to leave it to professionals like Jason. And Jason uses, crypto specialists like us. We vet these altcoins and we make sure we invest in the ones with the greatest potential for growth and success. So that's what I would really say. It's not suitable for everyone. It's very volatile. So make sure you do your due diligence.
Absolutely. Like I said, I have a small portion of clients that are interested, and we're able to serve them, because there's a lot of firms that just won't even touch it, won't help anybody with it, and they just refuse. So I think it just adds another option for people, just like if they wanted sustainable investing or ESG investing. There's different risk profiles, there's different value profiles. And so we want to help people invest along with their goals, their risk profile, and what they want to do with their money. At the end of the day, it's your money, and sometimes people just won't help you. So that's definitely something we're happy to help with. This is I really love for you to share. Feel free to be specific on it, but talk about Bitwise and what type of crypto strategies you offer as a company. And this is just, feel free to be as promotional as you want, and just tell us what you can really offer for people if they're interested to learn more.
Yeah, absolutely. So Bitwise is a very unique and special firm in the sense where we focus 100% on crypto. So we're really specialists in this space. We've been around since 2017. We've been through bull and bear markets. We're really known for having one of the largest Bitcoin ETFs. Of the large Bitcoin ETFs, we are the most cost efficient. So we're at 20 basis points, and we donate, because we're crypto natives, we donate 10% of our profits to open source developers. Now, these are the people that make sure there's no bugs, that the code is up to date, and make sure the software is running smoothly. And Bitwise, we were the pioneers. So the first ones to create an index strategy. So there's a crypto index strategy where you're investing in the top 10 largest crypto assets, but it's the crypto assets that we've vetted through our screening process. And we have one of the largest Ethereum ETFs. We have a crypto equity strategy where you can invest in the Bitcoin miners or the crypto exchanges. So those are 30 publicly traded stocks that fuel the crypto ecosystem. And we just came out with some momentum strategies where you're able to, where these strategies are investing in forward contracts of either Bitcoin and Ethereum. And they're able to rotate to US short-term treasuries if the momentum of the price is going down. If the momentum is going back up, we then go back into these forward contracts. So there's a lot of innovation that's happening at Bitwise, a lot of interesting strategies, and Jason is the perfect person to contact to get a hold of Bitwise strategies into your managed accounts.
Yeah, it's just so interesting what you all are doing there. And I really love how you focus so much on transparency and education. I've worked with Bitwise for a number of years, and that's why I invited you to come, join today, because I just really feel you, with all intents and purposes, do a great job in this space. That's not an easy space to work in. It just isn't. It's a lot of new stuff and constantly pushing into new areas. So thank you so much for answering kind of the general questions here that we had. I think it was a very informative, really good foundation, plus a little bit beyond, I would say, intermediate, education on this subject. And there are a couple questions that we had come in for Q&A. Would you be okay spending a few minutes to answer those?
Absolutely.
Yeah, of course.
Okay, great. So one is, actually, I'm going to have part of the answer already, but what do you think about XRP or XLM? Because Michelle asked this. And so Michelle's the one I reached out to you for, because she had mentioned us on a previous webinar. And actually, Michelle, there is a paper that Bitwise has generously actually wrote up just because I had that question. They put something together for us, and it's in the Facebook group, so you can read that. But is there anything you want to share today about those two here on the call?
Yeah, the one thing I'll share, and this kind of goes for all the altcoins. I think it's nice to kind of understand why these coins launched in the first place. What are they trying to do? XRP, XLM, all these alternative coins, there's typically a couple things that they're focused on, whether that's making their transactions faster or they're targeting a specific market. So whether that market's banking, gaming, it could be AI. So just like a tech or a software company is targeting specific areas, it's similar to these altcoins. And when I think about day-to-day work, there's probably realistically like 10 applications we use every day. That might be like Microsoft Word, it might be Google, it might be, Instagram, X, whatever, if it's social media. And it's similar to these altcoins. I think they're trying to compete to be into that like group of 10, the best 10 that people use on a daily basis, whether that's companies or for personal use. And the reason I say that is because that's kind of like the backbone of why XRP or XLM started. So to point out like XRP specifically, they basically started because they wanted to be faster than Bitcoin or Ethereum. They wanted to be low cost, and they wanted to essentially focus on cross-border payments between financial institutions. So their target area was essentially banks. They wanted to work with large financial institutions to essentially be that payment provider across the globe. XLM, on the other hand, they had a little bit different focus. They also wanted to be fast and cheaper, similar to XRP's goals, but rather than targeting those banks or institutions, they were actually targeting the unbanked. So they're essentially focused on building partnerships with non-for-profits, governments, smaller businesses. So kind of that conversation we had earlier about, smaller businesses having those expensive fees with credit card companies. They kind of wanted into that. And the reason I kind of, started off with saying there's like these different, I guess, motives is because that's essentially what XRP and XLM are doing. They're having specific areas that they're focusing on, whether they're trying to compete against an Ethereum or a Bitcoin, but there's usually a certain sector. And that's why we always say, like, do your own research, because there's different varieties of industries that these coins could target.
Excellent. Yeah. Like for me, it's like, I'm not really comfortable dipping my toes into altcoins at this point because they're really just a guess at the end of the day. But with things like Bitcoin and Ethereum, they're so big now. I think there's value there and sustainability there without question on some of those. Of course, none of this is investment advice. I definitely speak with your financial advisor. It's all for educational purposes here. I thought this was a really good question that came in, and I could probably answer it, but I'd love to hear from you as well. I would like to know the pros and cons to integrating these assets into a retirement portfolio. And fully transparent, the person that submitted, she's like, I'm just ignorant, when it comes to these asset classes. So just want to know some pros and cons to integrating these assets to a retirement portfolio.
Yeah, I think that's a great question. The list of risks for crypto, and particularly Bitcoin and Ethereum, have shortened over time. As we're seeing more maturation, more adoption from not only the retail side, but institutions, from financial advisors. It's becoming, Bitcoin and Ethereum going to zero is no longer a concern. With the new administration, the regulatory concern is fading. So the risks have definitely shortened. I'll start out with the pros. Bitcoin is the greatest alternative asset in the world, in our opinion. Of course, we're biased, but the fact is it has high potential returns. It's extremely liquid. And historically, Bitcoin and crypto has had low correlation to other assets. So it's a good diversifier for your portfolio. And what we say is a little bit of Bitcoin or crypto goes a long way. 2.5% is a great starting point. What we call it the hot sauce to your portfolio that gives it the ability for that high potential return. Yes, it is volatile, but it's also the correlation is low, so it's a good diversifier, as I mentioned. And the cons, of course, it's a volatile asset class. I mean, it was very volatile when it came out, as all or any emerging asset class would be. But as the asset class matures, more adoption, the volatility, and Braedon mentioned this, it's been going down. It's now about a little less than 50%. So volatility, of course, it has to fit you. It has to be suitable. And another con is if you don't rebalance monthly or quarterly, then it could be an outsized portion of your portfolio, which is a big risk. So you definitely want to make sure you're rebalancing or leaving that up to an advisor to do that. And then another con is, if you decide to go through an exchange, there's the risk with your wallets, losing your password. So those are the things you should keep in mind. But if you go through a trusted source, if you use something easy like an ETF, you're rebalancing on a regular basis, and you're allocating enough to make you feel comfortable, then I think it's a great asset class to have in your portfolio.
Excellent answer. Do you want to add anything to that, Brady?
The only thing I'll add is we keep throwing out this like 2.5% number, and some people might be like, that's just so random. I promise it's not random. We've punched the numbers, and the reason for that is for a couple of reasons. The one is it's enough to still make a substantial difference in your portfolio from a return perspective. But I think the better side to it is you don't notice a large difference from the volatility and maximum drawdown in your portfolio. And a lot of people we talk to, that's usually their major concern. We don't want these giant swings. I don't want to feel nervous investing in this asset class. The reality is, if you stick to that 2.5 or less, the volatility only jumps minuscule. Whereas if you start to make that jump to the larger allocations, obviously like 5 and above, 10%, that's when you'll notice a little bit more of the volatility. But that 2.5%, like Christine said, I think that's the hot sauce. It's the sweet spot. It's not going to be enough to make a drastic impact from a volatility perspective, but still enough that you'll notice the return perspective as well.
Yeah, and Barbara asks, I'm a conservative investor. What's my starting point? Barbara, in the Facebook group, there is a paper, like I said, it's called Why Crypto. It's in the file section. I think you should just read it and learn. But 2.5% is great. 1%, is a starting point where you can just start to learn. And what I found is if people have 1%, then it encourages them to learn more, to explore more, to educate themselves more. And I don't really recommend anybody puts over 5% in any one asset, regardless if it's Microsoft or Apple or anything else, because it just gets too concentrated, But that starting point of 1%, if you are interested and you're okay, adding another alternative is a minimal risk, but even 1% has been shown to lower volatility and improve returns over time. So the 2.5 number, I think Braedon's probably researched a lot more than me, but I just know at least 1% that will have an impact to the positive. So somewhere to start. And again, these are things that you can just educate yourself, take your time with it, learn. But it's going to be really interesting. And when you look at asset classes like commercial real estate right now, where basically people are getting forced back to the office, no one wants to be back in the office. Well, what happens if they just don't? There's this big battle right now. Commercial real estate could have its own issue, and that's a very well-known asset class as well. So there's all these things to consider when you are building a retirement portfolio, that you want to plan for money today, money you might need in 3 to 10 years, and money you might need in 10 years or more. And I think the sleeve, we call it our later bucket sleeve, that 10 years or more, where you're comfortable with a little bit more growth. I think it's a great place to consider, adding in an alternative asset class there that might have a little bit more volatility because you have a 10-year window. So wonderful questions, our wonderful workshop today. I really appreciate that. There's one last question we can answer. Again, just do your best with it because I want to make sure we're all answering all the questions, but it's how do you make money with crypto? It's one of those things that I don't want to go into this trading type of scenarios. I don't think that's the right way to go, but maybe you can share a little bit on your perspective. How do you make money with crypto?
Yeah, that's a good question. I think exactly what we kind of discussed today. And I think it's fitting, Jason, the name of your practice, keep it simple, because I think to also Barbara's question as well, I think that's exactly how you should approach crypto, especially if you're starting out and it's your first time. Just keep it simple. And I think that's the one thing that can be difficult about crypto. There's so many changing things. There's so many options out there that it can be somewhat of an emotional ride if you're trying to, dip your toes in everything. But if you stick with the top assets, the Bitcoin, the Ethereums, the top 10 of the world, and you just start with something as simple as 1% and keep it simple, I think that's a way to potentially, make money. Obviously, we can't make promises in terms of returns. But exactly like we discussed today, I think making an allocation, something that you're comfortable with is what's most important, and sticking to the basics and keeping it simple. And Christine, I don't know if you'd like to add anything as well.
No, that's a great response.
Yeah, and the reality, folks, is like, you don't know if anything's going to make money. You don't know if Apple's going to be a positive return. You don't know if Exxon's going to be a positive return. There's plenty of time where stocks return negative as well. So it's more about aligning your goals with your risk tolerance, being properly diversified, and then building a portfolio that matches with your goals, your timeline, and your risk tolerance. So if you get all those things right, it just allows you to expand to somewhere new. And investing should be boring, but it can also be fun too. At the same time, I think it should be a little bit fun. But keeping things very simple and going where you're comfortable with where you're at today, and then building on top of that is really the best way with anything that you're going to do. So thank you so much for joining us today. I think this was just wonderful, very educational. For everybody that's on here registered, we are going to send out a little survey. So we'd love to have any feedback. What do you think about this? Could we have done anything better? Would you like to have more education? Would you like to come back and do more Q&A on this subject? I know Braedon and Christine would love to come back and do that. So please fill that out when you get that. You'll get that, I think, tomorrow. And other than that, we will see you on the next one. We have some really good stuff coming up for you this year with a lot of good retirement around investments and retirement subjects, and or a lot of good education, I said. A lot of good education around investment and retirement subjects, and we'll see you on the next one. Thank you, folks. Talk to you soon.
Thank you.
Hey, thank you so much for attending our webinar. Once again, my name is Jason Hamilton. If you have any questions, you can find me at keepitsimplefinancial.com. If you would like to schedule a call to discuss your financial situation, integrating cryptocurrency into your portfolio, or just any sort of financial or retirement planning questions, we'd love to help you out. You can schedule a call at keepitsimplefinancial.com/talk, and we're happy to find a time that works for you. If you have any other questions, just reach out directly, and have a great day.